good morning to all on Bloomberg Television Worldwide. With us, Bill Gross of PIMCO. Bill, the tumult of yesterday, you've been through this many times before. Some people suggesting what happened was the high-frequency boys pulled away from the market. There was a liquidity gap within equity markets. Do you buy that idea?
Well, I think it's possible. Investigations are going to take place today, and I guess in Congress as early as next Tuesday. So we'll find out. I buy the possibility that the electronic wizardry that we've created can turn against us to some extent, much like HAL in 2001. But we'll just have to wait and see what happened. The problem is they voided some of the trades on the stock side. Everything else stands.
When you look at all this, Bill, and you run a lot of money like you do, how do you change your portfolios? Is there a strategic change at PIMCO as you look at the tumult in the U.S. or what we see within Europe? Have you made any sea changes within your bond allocation or this new equity allocation you speak of?
Well, it's interesting, Tom. We had a secular forum last week, a 3-day special where we bring in outside guests. Ken Rogoff was one of those. Author of This Time is Different, and then we did speak, obviously, to the sovereign crisis, not just in Greece, but elsewhere, and the fact that sovereign balance sheets are becoming the problem as opposed to private market balance sheets. And so the outtake from that was basically that global economies that had expansionary balance sheets would witness slow growth, and in some cases in Euroland negative growth, and that because of that, the core of Europe, let's speak to Germany, the core of Europe under deflationary conditions from its neighbors would probably do well from the standpoint of the bond market, and that the safety valve, the United States, in terms of liquidity and high-quality bonds would do well as well.
When you look at this, and I think of Dr. El Arian writing in the FT today, his urgency of getting something done in Europe. Is PIMCO as a private entity, can you come in and assist governments if and when there's a restructuring?
I don't think that's really our function. Our focus is with our clients, and we don't want to mix and match the policies and act as a government agent. Obviously, we're connected to some extent in terms of not only listening, but in some cases, talking on the phone to policymakers. But that's not our particular function. We're not about to save Greece unless it makes sense for our clients.
Well, the American job economy is certainly doing a little bit better here. What is your prescription right now for the Fed? Obviously, they are extending their extended period. I'm not going to suggest that unemployment, rather labor report like we see this morning is enough to move the Fed. But when does this extended period give up? If we move out now, do we move out to next year?
Well, it's obviously dependent upon what's happening in Euroland. To the extent that Euroland is deflating, that exerts a significant influence in terms of the U.S. economy as well. And so the Fed must be cognizant and careful of what's going on in Euroland. But to the extent of these numbers this morning, I think the Fed would want to see a number of months of 250,000, 290,000 type of job growth. We really need 200,000 plus in order to keep the unemployment rate steady. And as you probably have noted, the unemployment rate went up, in this particular month. And so the Fed's not about to move, in my opinion, until we start to see significant, steady progress in terms of job growth and lower unemployment rates.
Anyway, thank you so much for Bloomberg Television.